You're listening to The Credit Pros on Real Estate Radio New Jersey with local credit experts Damon DiCrescenzo and attorney Jason Kaplan. Now, here's Jason and Damon.
Welcome back, New Jersey. This is The Credit Pros with Jason and Damon. You guys better take your Adderall right now because we have a special guest in the studio, and I don't want anyone losing their attention because there's some really good information we're going to go over. Why don't you introduce her again, Damon?
First off, I owned a mortgage company for a long time. It was really a very, very challenging part of my life, and I have a lot of respect for anyone who continues to be in the mortgage business because I know that back then it was a difficult industry to be in because of all the paper and the regulation, and now it's become an even more regulated industry for the better in a lot of ways. But I know that it's a tough business to be in. You have to pay a lot of respect. So we brought in, as I said, a real specialist, someone that can give you real-world advice on mortgages. And I'm very happy to have Jackie Koven in studio from eMortgage Management. Hi, Jackie.
Hi, how are you?
Good, thank you. Before we even get started, if you're in contract to buy a home and you're not working with a mortgage broker or you're thinking about going to buy one, then I suggest you get pre-qualified. But let me take a second to give Jackie's number here. Get a pen. 732-300-7452. Again, Jackie's number, 732-300-7452. So let's take a second and talk about you. You're a licensed loan originator, right? Which is a big deal now.
Yes.
Because it's national licensing, right?
Right.
How long have you been doing this business?
I've been doing it almost 8 years, and I'm licensed in New Jersey and Pennsylvania.
Nice. And if I've, and I know we have some listeners that are in New York, if they call you, you can refer them somebody to work
someone
with.
in our office could do it.
All right, let's break it down. So we know what the kind of mortgages are. Somebody's looking to buy a house, somebody's looking to refinance a house, and that makes sense. What do people need to have with them? Say somebody's coming to you to pre-qualify to purchase a home. Mm-hmm. What information is the lender going to be looking at? What information do they need to have with them so that you, as the lender, can make sure that they qualify?
Okay, so what we're going to look at is we're going to look at, first of all, their credit. Then we're going to look at their debt-to-income ratio. We're going to look at how much money they have in the bank, their assets. And then we're going to look at the property itself. If the property is worth enough as collateral for the mortgage. So when we're talking about the debt to income ratio, we're talking about how much debt you have versus how much money you bring in.
Right. How about household? How's it work? So the debt to income ratio, they take a look at how much you make before taxes? Before taxes. Right.
Yeah.
And then is it your whole household or whoever's just signing on the loan?
It's just whoever's on the loan. Whatever people are on the loan. If it's one person on the loan, it's just their income. If it's a couple, it's both people on the loan.
Right. So think about that for a second, guys. If you're thinking about going to get a loan, but you say, I'm not going to put my husband on it because his credit stinks, it's just going to be me. Well, make sure you make enough money to support the mortgage. Because if you're not going to be on that, if your husband's not going to be on that loan, then really they're just going to be looking at you, and that really does make a difference.
Right.
You mentioned credit. What do they need to do? And I love that question. But what do they need for credit?
Well, depending on the loan which we're going to go into in a little bit, but depending on the loan program that the person may be eligible for, that's going to dictate what kind of credit they need. And basically, the minimum credit score you're looking at these days is anywhere between a 620 to a 640 credit score. You
got to have your ducks in a row.
Yes.
And the higher the credit score,
the better the interest rate.
The better the interest rate. And if you, my friends, are thinking about staying in a loan for 30 years, you really should consider trying to get the best interest rate you can because it's really going to add up over time. A quarter point on an interest rate over 30 years, $300,000 winds up to be many thousands of dollars in excess interest that you would wind up paying.
How do those credit scores stack up to what they were expecting like a couple years ago? Was it always 620, 640?
Oh, no. People with as low as a 580 could get a mortgage years ago.
Straight up. I used to have at a mortgage company, as long as you came into my office and you had a pulse.
I don't know about that. I don't know about that.
You know, and I guess Florida, because it was based on equity, there was just so much equity in people's houses. Mm-hmm. And so all the banks really looked at was equity. But we had people that come in and there was, it's a very different world, but there were stated loans, meaning you tell the bank, I make $4,000 a month. You don't show the bank, here's my tax return. Rather, you just say it. And so we had people coming in with a 512 credit score, which is, in most cases, very bad. And a stated loan, cashing out, a refinance cash out. And how it happened, I don't know. I can't be blamed, and I think that it was the bank's fault and maybe, the subprime lenders and this subprime meltdown. But it's a very different day and age now, right?
Yeah.
The banks want to know that you are fully capable of paying this loan back for a very long period of time. Mm-hmm. You need to come to the table with your information.
Well, Damon, it also has to do with the individual giving you the loan in a sense as some kind of moral obligation. And I know that it happened in the legal industry as well. A lawyer who's admitted to the bar today is a lot more qualified than a lawyer that was admitted to the bar 10 years ago.
Why?
Not because the education is any worse, because the qualifications to be admitted to the bar is. They pull your credit report. They want a history. The character and fitness application takes a lot more into effect. And that's similar to what Jackie's gone through with her national licensing. I'm not sure what the requirements were a few years ago, but I'm pretty sure it was a state test. And once you pass that state test at that local school that gives it to you,
it wasn't even that.
No, it wasn't even. You could be a loan
solicitor's
officer.
license, that's it.
Yeah, in Florida, as long as you worked for a company that was a correspondent lender, as long as you were able to be employed, essentially, you were able to originate loans.
There was no test at all.
Exactly. So, I waved in, but I mean, Jackie's taking exams like
oh yeah,
national.
Yeah, it's tough. It's not easy.
They're real hard. Yeah,
they're hard, and I think that speaks volumes about you. And like I said in the beginning of the segment, that the dynamic has changed as far as who's still in this business. And I think that the people that are left standing in the mortgage business are the real leaders, are the people that can be trusted because they have gone through great pains to continue to be in this business. And to continue to service people, I think it speaks volumes. So you're nationally licensed. If you're just joining us, this is the Credit Pros. We're speaking with our guest, mortgage expert, Jackie Koven. If you want to hit Jackie on an email, also we can do that. It's jkoven, Koven, at emmloans.com because that's eMortgage Management. Or give her a ring, 732-300-7452. Here's one thing that's interesting. You're licensed, and now they're pulling credit for mortgage brokers to be licensed.
Yes.
I think that's very interesting. I think it says that you better be able to handle your own finances before you handle somebody else's. Did they pull your credit?
Yes.
I think that's awesome. That speaks a lot about you. Let's talk about loan programs. Okay. What's out there? What's changed these days? What can people get?
Well, it's a lot more conservative. Basically, you're looking at conventional programs, fixed rate mortgages, adjustable rate mortgages, interest only, 40-year mortgages, FHA loans, which are basically government-backed loans. They're good for first-time home buyers, where you only have to put a minimum of 3.5% down, and they're pretty liberal with the credit requirements on that as well.
Yeah.
Yeah.
How about a conventional loan? What's a conventional loan? That's Fannie and Freddie.
Yes.
Okay. And FHA is a government-backed loan. What's good for people that are doing investment property, fix and flip?
Conventional, that's it. That's all they can get.
FHA is not even going to be playing
FHA
ball.
is just for primary residences. That's it.
Well, that makes sense. But the thing is that there are options. And here's another thing I wanted to talk to you about, too. So, eMortgage Management works with different kinds of banks and has different kinds of programs from those banks.
Exactly. We work with Chase, GMAC, Wells Fargo, and Bank of America.
The obvious benefit there is if you sat down knee to knee with a person at Chase, you're restricted to the programs that Chase has to offer. You're restricted to the interest rate that Chase wants to give you.
Right. You could look for the most competitive interest rate this way.
That's fantastic. So you're able to get out there and represent the consumer the right way and getting them into the best loan product for their specific need.
We actually get a little bit of a better rate. Like, let's say I gave you a Chase interest rate and you went into Chase. I would have a slightly better interest rate because we work directly with them than if you went into the branch.
I didn't know that.
Yeah.
See, that's good. So again, if you're thinking about buying a house or getting a loan, and you're going into your branch, I understand you have a relationship with them, and that relationship does mean something in most cases. You get sometimes preferential treatment.
But that relationship is retail.
The relationship is retail.
And it's a lot more black and white in the branch.
Right.
If you have a special extenuating circumstance, they're not going to really take the time to listen to you and care about it and see what they can do to go above and beyond to help you get your loan.
Stay with that for a second. So are we on? Is eMortgage Management underwriting in-house?
Yes, they underwrite in-house. So plenty of times I have to plead a customer's case. For instance, maybe we have someone, they have high credit, their debt to income ratio is a little bit tight, it's a little bit on the high side, and we have to get a couple compensating factors to get the deal to go through.
So you want somebody who's willing to play ball, because if you have a 760 credit score and you stroll into Chase, they're probably going to give you a good deal. You have, $200,000 in the bank with them.
Sure.
It's a layup. It's a no-brainer. But the thing is that most of the people in our community are not in that situation, and sometimes you're trying to fit a round peg into a square hole. Or is it vice versa? Whatever. But the idea is
a round peg fits in a square hole. It's a square peg in a round hole.
That's what I was thinking. Does a round peg actually fit in a square hole?
It depends how big the square is, but yes.
That's what she said. So, the opportunity exists for you to think outside the box, to try to get your deal done.
Right.
Because at the end of the day, there's really only two important things in closing the loan. It's not who's holding the loan. You don't care who you're sending your statement to each month. All you care about is, number one, your interest rate. Number two, did you close the deal?
Right.
Were you able to get it done? And of course, the fees. The fees have to be reasonable too. But that's where it makes sense. So let's talk about my favorite time. Well, if you're just joining us, we're talking with Jackie Koven, mortgage expert. Give her a ring, 732-300-7452. And you're listening to the Credit Pros on Real Estate Radio. Our number is 973-771-5118. Again, 973-771-5118. Pick up the phone and give us a call, because I think that we're going to take some calls in the next segment. Let's talk about credit, which is my favorite topic. What happens if you have some damaged credit?
Okay, so credit's just one of the factors we look at in determining if you could get a loan or not. Let's say we have one person who has a couple things wrong on their credit and someone who has perfect, pristine credit. Obviously, the second person's going to be in a better situation, but that doesn't mean that the first person can't get a loan. So if you have a couple little dings on your credit, chances are you probably still can get a loan. If you have some major damage on your credit, that's when we work with you guys at the Credit Pros to see what you guys can do to help the person fix up their credit so they could be back on track to buy a house.
That's right. You need to be planning ahead, my good friends. If you know that you have problems on your credit, one of the benefits about a credit restoration process, a legal, ethical credit restoration process, is your credit report doesn't have any memory on it. So let's say we're able to get a few of these items deleted, and then you stroll into Jackie's office. There's no history of what used to be there. Rather, all there is what is there today. And so if we can pretty it up legally and ethically, then we should be able to get you into a loan. I think that makes a difference. How about compensating factors? How about if somebody has, and let me give you an example.
Okay.
Somebody has some credit damage and they've gone through a divorce, or they had a loved one pass away, but they make really good income, and perhaps it's a refinance and the property has equity. Are these things that an underwriter would take into consideration?
Well, actually, there's different compensating factors for each kind of loan program. So, yes, stuff like a lot of equity in your house, great credit, that definitely is a compensating factor. Money in the bank's a compensating factor. Time on the job. How
about if you're military service? We see a lot of military.
Yes. Well, then they could get a VA loan.
Well, let me talk about that, because a lot of people don't even know what that is.
So a VA loan is a great loan, actually. We've been doing a lot of them in the past couple years. You could get 100% financing, no monthly mortgage insurance, very, very competitive interest rates. And they'll start with a 620 credit score.
Nice.
Yeah.
And 100% financing.
100% financing on a purchase.
Does just one person on the loan have to be in the military? Or do
just
both?
one person.
Okay.
I find a lot of times, for better or for worse, military people really don't know that they have that in their right.
Right.
How about if they're National Reserve? They've served in the military, yeah. And so I find that a lot of vets, particularly my father-in-law, didn't know some of the things that he has available to him, having been in the military. And
it could even be for the spouse of a deceased vet.
Oh, the spouse of a deceased vet.
Yeah. Yep.
Well, I think that's huge and important. A lot of times, again, they don't know the rights that they have or some of the things that they can do.
That's a really good loan.
Additionally, also, this might not be VA loans. They might be going for other type of loans, but also when you're military in service, you have access to the Sailors Leave Act. Mm-hmm. So a lot of these collections and derogatories and late payments that are on credit reports that might be stopping you from getting any other type of loan are able to be removed from a credit report based upon a lack of an obligation to repay things on time when you're overseas on active duty.
Which is actually what we were going to talk about and what they don't want you to know. But that's really good information. Again, counselor, thank you very much. One last thing I wanted to talk about on a mortgage payment. A lot of times people say, oh, my mortgage payment, look at how low the interest rate is. And we were talking about this too before, what people aren't finding out completely. In a mortgage payment, it doesn't matter really how low the interest payment is if you don't know what your taxes are going to be and what your insurance is going to be, right? So what's involved in a mortgage payment? What are people usually expecting to pay?
Well, it's always the principal and interest. And oftentimes, most often, it's the principal, interest, taxes, insurance, and if applicable, mortgage insurance.
Well, and you better know what that is, especially if you're buying in Jersey, because you can really get kicked in the head with your property taxes. And if you're not careful, that can throw you over budget. Over
your debt to income ratio, and then you wouldn't qualify.
Exactly right. Or even if those numbers aren't right, and then all of a sudden you get your tax bill in the mail, and they've assessed your property for more money than you think it's worth, and it winds up to be.
So there really are a lot of moving parts. We have to see what we're putting down, what the property taxes are. If the property taxes are too much, it's going to be your debt to income ratio. It really pays to have a trusted advisor kind of walking you through the process, no matter how educated you think you might be.
Right.
Well, that is good advice again, counselor. I appreciate it, Mr. Kaplan. You're listening in to the Credit Pros and mortgage expert Jackie Koven. You can reach Jackie at jkoven, Koven, at emmloans.com or on her cell phone. That's so nice that she's willing to give out her cell phone on the radio. Don't be crazy and call her drunk dialed in the middle of the night. It's 732-300-7452. Again, 732-300-7452. If you want to speak with us about your credit problems, about some strategies, or you want to knock around some financial ideas, pick up the phone and give us a call. Jason and I are here to speak with you. Our number is 973-771-5118. Again, 973-771-5118. We're on the web at creditrepair.to. After the break, we have what they don't want you to know, some fantastic credit true or false, and as I promised you, and I will deliver it to you, to my young professionals out there, the 10 credit crack commandments. That was Biggie Smalls' 10 crack commandments, I think. So stick around after the break. We're looking forward to speaking with you. This is the Credit Pros.
We have a couple of callers on the line, but we're going to reserve our telephone call, I think, for Jackie, since this is her time on the radio.
Thank you.
If you have a call for Jackie, you're the one we're going to take. So we'll see you on the other side.
For all your credit problems, concerns, or questions, call the show's off-air number at 973-771-5118 and speak to the hosts of the show, Damon DiCrescenzo and attorney Jason Kaplan, directly. 973-771-5118. This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us. The Credit Pros on Real Estate Radio New Jersey is hosted by local credit and finance experts Damon DiCrescenzo and attorney Jason Kaplan. The purpose of the show is to help consumers understand what's really going on with their credit. They're teaching you the why and the how-to, so you'll always be one step ahead of everyone else. If you are having problems qualifying for a purchase or you're tired of high interest rates because of bad credit, Jason Kaplan can help. Call Jason directly at 973-771-5118. That's 973-771-5118. Take advantage of speaking with Jason anytime you're having a credit problem. Having someone who can answer all of your questions that truly cares about you and your family's best interest is priceless. Call Jason Kaplan and the Credit Pros today, and you'll be glad you did. 973-771-5118. That's 973-771-5118, or you can visit creditrepair.to for more info. For all your credit problems, concerns, or questions, call the show's off-air number at 973-771-5118 and speak to the hosts of the show, Damon DiCrescenzo and attorney Jason Kaplan, directly. 973-771